Hello, Andre Garcia here with Lightning Loans by Innovative Mortgage. In today's video, I want to discuss the difference, and it's a very clear and easy to determine difference between a pre-qualification and a pre-approval. I've been with Realtor.com for a few weeks now, and I've talked to a lot of people that say that they are pre-approved when they are in fact pre-qualified. And I'm gonna, by the end of this video, it will be incredibly easy for you to see what the actual difference is, and it's not gonna be what you may think. In terms of, like, a lot of people say, well, you need to hand in tax documents. You got to turn in your tax returns in order to get pre-approved. Not really. That's not, it is important. It's going to be a stronger pre-approval. Just because you're pre-approved doesn't mean that the loan will get approved. But I can pre-approve you without tax returns, without income documents. There's only really one thing that I need, which is the credit report. And that's really one of the inspirations behind this video, is so you see the reason why why the mortgage application and the credit report is important when obtaining the pre-approval. It's also very critical for down payment assistance programs. If especially if you're a first-time home buyer, I have probably talked your ear off about all the different down payment assistance programs that are available, because there are a ton, especially in Miami-Dade, Broward County, West Palm Beach, because they're considered high-cost areas. So if you combine a high-cost area with a first-time home buyer, it's just it gets pretty significant, to say the least. Okay, so one of the first steps in order to determine your eligibility for down payment assistance, and it's not only for first-time home buyers, but for first-time home buyers, there's a lot more available. If you're not a first-time home buyer, depending on the area, there's still tax credits available. There's still some down payment assistance programs and grants, second mortgages. So there's a lot, but first-time home buyers might have a few more options. Okay, so in order to qualify for any of the first-time home buyers, there's of course the rules that they have set. There's usually an income. You usually have to be within a certain percentage below the income. Sometimes it's above the income. You have to be at a certain percentage, so of the median income. So, for example, Hollywood, Florida, there's up to $50,000 in down payment assistance available from the city of Hollywood. Well, actually, from Broward County, technically. And you have to be at 80. No, is it 80? They'll allow actually up to 100, 80 or 100. I don't remember. 100%. Yeah, so 100%. Most areas you have to be at 80% of the median income. In the South Florida area, Dade, Broward, Palm Beach, is about, if you're making if you're making less than $76,000, I think it is, that has to be confirmed. But if you're making less than $76,000, then you're good income wise. Okay, you also can't have more than I think it's $50,000, and each program is a little bit different. Okay. But for the one that I'm thinking of right now, if you have more than $50,000 in liquid assets, they will not give it to you. If depending on the area, like Lauderhill, you have to be at 80% of the median income. But some areas, I think it's Weston, I don't remember exactly, but there is an area where you can go up to 120% of the median income. So that will allow you up to like $90,000, $80,000, $85,000, $90,000. So as long as you're making $95,000 or whatever it is or below, you'll qualify for down payment assistance as long as you buy a place in that particular town. Okay, so I mean, there's a few ways that there's a lot of different ways that you can shop for a house, but if you want to structure it around a down payment assistance program and you make a lot of, I mean, there's a lot of different ways, but yeah. So anyways, pre-qualification. A lot of people seem to think that they are pre-approved when they are in fact not, and you will see very clearly, and you will be able to ask one question in order to determine whether or not you are pre-qualified or pre-approved. Now, you might be talking to a loan officer that's like, oh yeah, pre-approved, and because they're really confident, because they know what they're doing, and they've worked on a lot of files, and they looked at your credit and these things, and they feel confident enough to call it a pre-approval, and maybe they're right, but technically not a pre-approval. It still might be a pre-qualification unless they take the one critical step, which I'm going to show you in a couple minutes. A pre-qualification, if you've talked to me on the phone and we've had a little bit of an extended conversation, that conversation was me pre-qualifying you, trying to determine which box is going to be the best fit for your particular scenario based on what you're trying to accomplish and a few of the details about your financial and work life. Okay, so in order to get a pre-qualification, you're just talking to a professional, someone who hopefully knows what they're talking about, who has experience in the business and has closed loans before and knows what lenders are looking for generally. Okay, so for example, if I'm going to ask you about your income, for example, income, whatever it is. If it's $4,000. Here, we'll run, we'll do a quick pre-qual right now. Okay. So, what's your income? I make $5,000 a month. I gotta pull it up here. Okay, what's your income? I make $5,000 a month. Okay, great. In terms of car payments, credit cards, how much are you paying out monthly? Well, I have a credit card for $100, another credit card for $100. My car payment is $500. Okay, great. How much of a monthly payment are you looking to be, or do you know how much you want to spend on a house? Well, I don't want my monthly payment to be more than $1,500 a month. Okay, great. How long have you been at your job? Have you been at your job for longer than 2 years? No, I haven't been at my job for longer than 2 years. I've been at my job for 6 months, but I moved jobs because they're paying me more. I'm in the same line of work. I've been in the same line of work for 5 years. Okay, great. In terms of cash down, how much are you working with? Did you have any cash down? Are you trying to use down payment assistance? Are you trying to keep it minimal? Do you want to put money down? Everybody's different. I mean, not that I don't care what you do, but I don't care what you do. That's entirely up to you. A lot of that is, your own mentality, what you feel more comfortable with. As long as it works for the loan, then I'm going to be like, okay, great. And I may provide some alternatives depending on what's going on in the credit, and if the debt to income is high, it might be better for you to pay off a little bit of debt instead of putting all that money down. But that's on a case-by-case basis. Okay, great. So you're making credit wise, how do you stand? My credit score is a 635. Okay, great. I know that for a conventional loan, which will be more clear to you exactly what a conventional loan is in a couple minutes here. The minimum credit score for through us for a conventional loan is 620. Okay, through everybody for that 620 rock bottom minimum credit score. So great, you may qualify for a conventional loan. You're 630, you said. I think that's what I said. Okay, so 630, great. You're over 620 conventional loan, you're good. For FHA or government-backed loan, that the minimum credit score is 580. So if you get an FHA loan, minimum credit score is 580. You said your credit score is 630. And then I'm also going to want to know, okay, what do you have on your credit? Like I have the car payment credit cards. How long have you had those? Well, I've had those for 4 years. Okay, great. So you have established credit history. You have seasoned trade lines, and season means that time has gone by since it's been in place. Okay, so you have seasoned trade lines. Your credit score is over the minimum. You're looking for you're paying out $500, and I know that the maximum LTV for the maximum LTV is going to be 50%, so that will give you a maximum combined debt amount of $2,500. and you're looking for a $1,500 a month mortgage payment of $500, and you're paying out currently $500 a month in debt. So pre-qualified, done. That's it. Now, we can get fancier. It can get a little bit more involved. If I want to do a soft credit pull, maybe I do a soft credit pull. If you're not sure about your credit and you don't have Credit Karma and it's okay with you, then I might do a soft credit pull to see exactly what's going on. Though I've been shying away for that, I would rather just do the hard pull because of what I'm going to show you next, and it'll be clear to you. Okay, so this is, if somebody looks at credit and then they say that, yeah, I think I can get you done, or yes, you'll be approved, that's not a pre-approval. That's still a pre-qualification. Even though they ran your credit, it's not necessarily a pre-approval. It's still a pre-qualification. If you submit tax documents, income documents, that's still, unless they take a very specific step, which I'm going to show you in just a minute here, it's still pre-qualification unless we are going to stop that one, and we are going to look at this one. Okay, well, I'll blank it out here. This one has some private information, but by the time that you guys look at it, you won't be able to see anything, so it's fine. Okay, so Fannie Mae, and just so you can fully wrap your head around this. Okay, let's talk a little bit. Let's go a little bit deeper into the mortgage industry and how it actually works. Okay. I'm sure you might have heard the term conventional loan. You might have heard the term conforming loan. Okay, what a conventional loan is a loan that Fannie Mae will purchase. That is the core of the mortgage industry. Okay, when a lender gives you money to buy a house in the form of a loan, they do not keep that loan on their books. So you're paying back the lender, sort of. You're actually paying back Fannie Mae. After your loan is closed, you have your house, the money's been given to you. What the mortgage lender is going to do, they're going to turn, if it's a conventional loan, they're going to turn around and they're going to sell that mortgage. Let's say they gave you $400,000. They're going to turn around and sell that loan to Fannie Mae, get their $400,000 in order so they can do another loan. And they're going to stay on as the loan servicer. So you'll make your payments to them. They'll answer questions. They'll give you a phone number to call if you need anything. They'll do customer service, customer support. That is the loan servicer. Okay, so they gave you $400,000. Within a few days, weeks maybe, they turn around. They sell your mortgage to Fannie Mae, and then it's their job to collect money, not for themselves. They're collecting money for Fannie Mae in order to give it to Fannie Mae, and they get a little bit of the cut for doing the loan servicing. They get a cut of the proceeds. Okay, so and Freddie Mac, very much the same thing, but like it's for FHA loans, VA loans, USDA loans, for government-backed products, Freddie Mac. For conventional conforming loans, Fannie Mae. Fannie Mae, you have better deals overall. So the cost is lower, mortgage insurance costs less. Freddie Mac has different rules. Each of these lenders have their rules. Okay, each of these lenders have rules that they set forth, or each of these I don't know, whatever you call them, these capital providers, I guess we can call them. They have rules that lenders need to adhere to in order for the loan to be purchased from them. Okay? So in order for you to get pre-approved, your credit does have to be run. I don't necessarily need like tax returns, income documents, and all that stuff that people say that you need. I would prefer to have it, but if you're 100% sure of the information that the information that you're giving me is correct, then I can do this without that. And then you just, but you have to understand that when you actually submit the documents, if anything is different, this whole thing, the whole pre-approval could go out the window. A pre-approval doesn't mean that it's 100% done deal. It still needs to go to underwriting and these things, but it's a lot closer. So through AUS, what that stands for is Automated Underwriting System. And Fannie Mae, Freddie Mac, they have an automated underwriting system. What's happening in the back end when I submit here, and I'll show you. I run it. I'll have the credit. This is the credit company that we use in order to run our credit reports. So it has my login there, and my system automatically ties the credit report number, which needs to be submitted. I just go there, run one click AUS, and there we go. So now I'm doing automated underwriting. Now, one of the reasons that this has been coming up is because I've been talking a lot about down payment assistance programs. I've been a lot of discussions with first-time home buyers. Okay, so this is the reason, the main reason, because I can give you a ton of information without a credit report. Just giving me a rough idea based off of what Credit Karma is. And if you're if you're a year out, which again, I don't care. I just love talking shop. I love pretending like I'm a smart guy that knows a lot about this stuff and giving people advice. I love answering questions. I just want I just want to help, man. That's what's in my heart. I just want to help. I just want to help because if I know that if I put in my heart, soul, and it is actually, I want you to see my face when I say this because I mean it, man. I do. If in my heart, soul, body, mind, and spirit, the only thing that I keep is a wantingness of helping and providing accurate information without rushing people, without putting pressure on people to act. And I just I treat you the same. If I treat you the same when you are a year out as I do when you are a month out, and I give you the same level of attention, and I get back to you immediately, those things, they build trust. That's what builds trust. That's when you know that you're working with a professional, okay? So that's what I think about. I don't think about my commissions or I got to close a loan. Or, no. I'm here to help. And I know that if I do that and if I just help people and I answer questions and I'm just cool about it and I'm friendly and, a lot of business comes my way. I've been in these types of positions for a very long time, since I was 19 years old. I'm 43 and I'm a top producer everywhere I go. And I've had this sort of, when I first got in, I used to be like, all right, come on, you got to do it now. When I stopped doing that, my income literally doubled. When I started being more like, well, if you don't want to do it, then don't, it's fine. When I started taking that approach, just everybody, I don't know what it was. I just realized, like, holy smokes, this is having like the complete opposite effect that I thought it was gonna have. So I'm very laid back. I'm very laid back. I have no expectations. I don't demand. I don't rush people. None of that. We do things on your terms. We do things when you're ready to. I can give you a ton of information without a mortgage application, without any income docs. We could have a very extended conversation. But we're talking down payment assistance, and I've already pre-qualified you. This is the next step. because you can't get down payment assistance unless you get an FHA loan or a conventional loan. It's the only ways that you can get down payment assistance. I can't do it with hard money, with a non-QM loan. It has to be Fannie or Freddie. Okay, so this is how you know whether or not you are actually pre-approved. It's based off of whether or not you have been submitted to this automated underwriting service. You know, so this will be able to see. Well, first, as you can see in this file, which I gotta. Man, there's a lot of private info here, but I'm gonna get rid of that. So you shouldn't be seeing it. Well, you're not going to see it because, you know, I don't want to violate my people's privacy. But you see here, approved eligible. That's the highest level approval that you can get. So this is a pre-approval. It's been through the automated underwriting system of Fannie Mae and or Freddie Mac. This particular borrower is approved for either a Fannie Mae or a Freddie Mac loan, something which very few lenders can run both at the same time. So, you know, bragging rights there. So I know that Fannie Mae, Freddie Mac, we could go either way with this loan. Freddie Mac is FHA, so with an FHA loan, I can, if it's a first-time home buyer, I know that I can offer them up to 105% financing. So they can get 100% of the purchase price plus an additional 5% in order to cover some of the closing costs. Fannie Mae, though, is going to have slightly lower interest rates, and the LT, they might have to come up with a little cash, but if they're okay with that, if they're okay with coming up with a little extra cash, then you know, they'll have a lower interest rate, lower cost overall, especially the mortgage insurance. The mortgage insurance through Fannie Mae is less money than through Freddie Mac, and if you do a high LTV loan through Freddie Mac, or if you do a high LTV FHA loan, the only way to get rid of mortgage insurance is to refinance the property. But, you know, is what it is. You know, what I provide to you is the best available deal. But, you know, depending on what your final decision on the property is, that's you know, that's going to determine which way we go. This borrower is going to have a ton of options because they're approved through Fannie Mae or Freddie Mac. Now, it doesn't matter if they ran your credit, if you submitted tax returns, all that stuff doesn't matter. Doesn't matter. This is what matters. This is what determines whether you are pre-qualified or pre-approved. Now, you might be talking to a very, very confident loan officer, and that very, very confident loan officer might, you know, could definitely know what he's doing, and I'm sure that he does. But until you have been run through the automated underwriting system, and there's a decision that has been handed down from Fannie Mae and or Freddie Mac, you're not pre-approved. You're pre-qualified. Okay. Thank you very much. Video's 23 minutes long. A little long. I hope you don't mind. I'll try and edit it down a little bit. There's going to be a lot more content. I have a lot more videos planned. I just get very busy during the day answering questions, making calls, and, you know, taking care of my responsibilities. But there's a lot of really bad information that's floating around. A lot of information that is being perpetuated by what I believe single point lenders who have very limited options. And the problem with single point lenders who have like only their own internal programs to offer is that that's all that they can offer. And if there's a better deal someplace else, they're never going to tell you about it. They're only going to tell you about what they have because they want to make money. I'm different because I don't care where the money comes from, and I have 150 sources. You know, I don't care who gets the loan. It's all about who's going to give you the best deal. You know, I'm not a salesman. I'm your lawyer, sort of. I'm not, but, you know, that's my approach to this job. My borrowers are my clients, and I represent my clients as if I was their lawyer. So I'm always on your side. Not that I don't care about the lenders, and I would never cheat. I don't commit fraud, none of that. But I don't care who the lender is. They call all the time trying to build a relationship, get to know you, because I mean, real estate is it's big. It's very much a relationship business. But, my relationship is with my borrowers, and if you come in second, then you're not going to get the deal. That's plain and simple. Whoever gives me the best deal, I'll have you in case something goes wrong with the first lender, then you could be the backup. But, it's a bottom line sort of thing, sort of me. Who has the best pricing? That's who's going to get the deal. So anyways, questions, comments, concerns. If there's any topic that you want me to cover next, I have like a pretty long list of videos that I'm going to be making for these emails that I'm sending out. But if there's something that you want me to cover, be happy to do it, without any expectation. I'm not like, anyways, without any expectation. Tell me what you want to know. I'll make a video, send it out to you. All right. And well, send it out to everybody. Because if you have a question, then I'm sure that a lot of other people that are that are part of our little community here that you don't even know really exists, but there's about 70 of us and it's growing. If you have a question, other people within the community are also going to have that question. And I've been in the game for a very long time, so like I don't know what you don't know. I know what I know. And, I don't remember what it's like to not know a lot of this stuff. So, happy to address any questions. Right now, I'm making the video around some of the crazy misinformation about what is and it's not pasta that I've been hearing. Anyways, you guys have a great one. All right. We'll cut it off here because I could keep babbling for freaking hours. All right. All right. Have a great one. Hopefully we'll talk again soon. If you want to schedule a meeting, put an application, whatever you need, just let me know. We'll get it done. Thank you.